How to spot potential price changes in the crypto market. Trading cryptocurrencies such as Bitcoin or Ethereum offers high volatility, which can be a great profit opportunity if you can spot reversals early. However, the crypto market is unique, subject to extreme sentiment, whale manipulation, and 24/7 movement. Here's a strategy to identify potential price changes. Chapter 1. Support/resistance on large time frames. Crypto's secret turning point. How does the whale's treasure map shape crypto price movements? Think of crypto as a choppy ocean. Small traders are the fishing boats, while whales, institutional players, or large investors, are the motherships that drive the waves. The weekly/monthly time frame is their navigation map. That's where they mark the strike zones for asset accumulation or distribution, away from the ripples of daily volatility. Why large time frames matter. 1. Anti-hoax signal. Crypto daily patterns are often deceptive. A 10% pump could be just a trap before a 20% dump. But support/resistance levels on monthly charts are globally recognized price DNA. Example: Bitcoin. In Q2 2023, BTC falls to $25,000. This is not a random number. This level is the psychological support, memorable round price, plus the institutional accumulation zone in 2022. The result? BTC bounced 80% to $45,000 in 4 months. Ethereum, $1,500 is ETH's stronghold in 2023. When the price hit this zone, by volume on Binance, Coinbase, and Kraken exploded, a sign of whales coming in. 2. Universal language of the market. Key levels like $30,000 BTC or $2,000 ETH are monitored by trading algos around the world, from Wall Street to South Korean traders. If the price approaches these levels, liquidity builds up like a magnet. How to apply this analysis? Practical steps. 1. Open monthly/weekly chart. In TradingView, look for historical swing lows/highs, extreme turning points. Example: Solana. The $20 support on the weekly chart is a life and death zone because it was a rebound point in January and August 2023. Use a horizontal line, horizontal ray, to mark these levels. 2. Confirm with volume. High volume in the support/resistance zone equals a sign of participation of whales. Tools. Glassnode. Check exchange inflow/outflow. If BTC leaves the exchange in the $25,000 zone, it means whales are hoarding. CoinMarketCap. Compare volumes on various global exchanges, Binance versus OKX versus Bitstamp. 3. Join global sentiment. Example: as BTC approaches $30,000 in 2024, news from the Fed, US, crypto regulations in the EU, or crypto policies in the Middle East could be breakout/breakdown catalysts. True story: how $100,000 became a Bitcoin dream. In 2021, BTC failed to break $65,000 on the monthly chart. Whales began distribution, triggering the 2022 bear market. But in 2023, silent accumulation occurred at $25,000, the same zone where U.S. institutions like MicroStrategy bought thousands of BTC. The result? The 2023 to 2024 rally was triggered from this level. Simple analogy. Support/resistance in crypto is like legendary concert ticket prices. If the price of Taylor Swift concert on StubHub falls to $500, historical support, fans will scramble to buy, similar to whales buying crypto at a discount. Major warning. False breakout. Sometimes prices break psychological levels, e.g. BTC $31,000, then fall again. Always confirm with monthly closing candles. Don't fight the whales. If BTC is consolidating at monthly support with low volume, do not speculate short. Wait for breakout confirmation. Mandatory tools. TradingView, multi-timeframe analysis. CoinGlass, track global order book liquidity. CryptoQuant, monitor the activity of whales in the chain. By understanding the secret map on large time frames, you can read the mind of the market, not just guess. Chapter 2. Crypto reversal patterns, from head and shoulders to Bart pattern. How do these secret patterns read the market's mind before the trend reverses? In the wild world of crypto, reversal patterns are the market's sign language, a way to guess when the whales will flip the tables or trigger panic selling/buying. Classic patterns like head and shoulders still apply, but in crypto, everything is more dramatic and often manipulated. 1. Head and shoulders, HNS, an inverted HNS, the whale's secret weapon. Analogy: imagine HNS like a roller coaster. The first peak, left shoulder, is a test of bullish strength. The second peak, head, is the peak of FOMO euphoria, and the third peak, right shoulder, is the trap before the price freefalls. BTC/USD example, April 2024. After a correction from $73,000 to $60,000, BTC formed an inverted HNS with a neckline at $63,000. When the price broke $63,000 with high volume on Binance and Coinbase, a 30% rally to $82,000 occurred, a signal of institutional accumulation before the Bitcoin ETF news in Hong Kong. How to use: wait for confirmation of a candle close above the neckline, daily/weekly closing price. Volume should increase 2-3x the average at breakout. Check on CoinGlass or TradingView. 2. Double top/bottom. Psychological fortresses that are often shot. Double top equals bearish signal when the price fails twice at the same level. Double bottom equals a bullish signal when the price bounces twice from the support zone. Real example: Doge/USD. 2021, Dogecoin failed to break 75 cents twice, double top, a level that many retail traders on Robinhood were eyeing. The result? Doge plunged 85% to 10 cents. SOL/USD. 2023, a double bottom at $15. FTX's post-bankruptcy accumulation zone triggered a 700% rally to $120, supported by pumps from market makers like Suw Crypto. Tips: double tops/bottoms often appear around psychological round number levels, $1, $10, $100. If the pattern forms on the monthly time frame, the reversal potential is stronger. Example: ETH/USD double bottom at $880 in 2022. 3. Extreme candlestick patterns. Market emergency alarm. Candlesticks with long wicks are the market's cry. That can be read. Hammer, bullish, long lower wick plus small body on top, like a hammer, appears in the support zone. Example: BTC/USD at $38,000, January 2024, formed a hammer on the weekly chart, followed by a 25% rally after the grayscale of BTC selling reduced. Shooting star, bearish, long upper wick plus small body below, like a shooting star, appears in the resistance zone. Example: XRP/USD at 93 cents, July 2023, formed a shooting star on the daily chart, then fell 40% after Ripple lost in the U.S. court. Crypto's unique patterns. Unexpected market creativity. A. Bart pattern. Altcoin volatility hair. What is it? Pump 50 to 100% in a matter of hours, then dump to initial price, forming a Bart-Simpson hair-like pattern. Often occurs in small altcoins, e.g. memecoins or AI tokens. Example: WF/USD. March 2024, Dogwafat, WF. Pump 150% to $3.30 on Bybit, then dump to $1.20 in 2 days. This pattern is often manipulated by snipers, trading bots, who exploit thin liquidity. How to avoid the trap. Don't FOMO buy when volume suddenly explodes with no fundamental catalyst. Check social sentiment on Lunar Crush. If the hype on Twitter/X is excessive, watch out for Bart pattern. B. Wyckoff accumulation, the whale's secret scheme. What is it? A secret accumulation pattern consisting of 5 phases. 1. Selling climax. Extreme price drop, e.g. BTC drops to $25,000. 2. Automatic rally. Short rebound, e.g. to $30,000. 3. Secondary test. Retest of the low zone with decreasing volume. 4. Spring. Price. Fake breakdown. Bear trap. 5. Backup. The final rally that confirms the uptrend. Example: BTC/USD, 2023. The Wyckoff pattern occurred at $25,000 to $30,000 before rallying to $45,000. Whales like BlackRock started accumulating quietly in the spring phase. Important warning: Don't be fooled by false breakouts. False breakdown example. SOL/USD in 2023 had a breakdown from $20, as if it was about to fall, but immediately rebounded 300% as whales stepped in. Anti-trap strategy. Volume confirmation. Breakout/breakdown must be accompanied by 2-3x average volume. Timeframe higher high/low. Make sure the price makes a higher high on the daily/weekly timeframe. Fundamental check. If the reversal pattern appears along with big news, e.g. ETF approval or regulatory war, the potential for validity is higher. Tools required. TradingView. Use the pattern recognition feature for automatic detection of HNS or double top. Lunar Crush. Track social volume plus sentiment to avoid Bart pattern traps. CryptoQuant. Monitor exchange reserve to know when whales start accumulating. Crypto reversal patterns are not forecasts, but probabilities. Always combine them with on-chain analysis, whales activity, and global macro sentiment. By mastering these patterns, you can read the mind of the whales. Know when they are priming the pump or trapping retail traders. Chapter 3. Public sentiment. Buy the rumor, sell the news. How does mass emotion fuel crypto price movement? Crypto is a market that lives off narratives, rumors, and crowd psychology. Here, truth often loses out to a compelling story. When everyone is talking about Moon or Lumbo, that's when the whales are smiling while preparing exit strategies. 1. FOMO, fear of missing out the gasoline that burns the rally. Analogy. FOMO is like a crowd at a free concert. The more it's talked about in the media, the more people jump in, even though the stage may be about to collapse. Bitcoin ETF 2024 example. When rumors of a US Bitcoin ETF were approved, BTC skyrocketed from $40,000 to $60,000. But once the official news came out, January 2024, the price dropped 20% to $48,000. Whales had already sold the news while retail was stuck FOMO at the peak. Altcoin case. Shiba Inu, SHIB/USD. In 2021, the Dogecoin killer, hype on Twitter/X made SHIB rise 10 million%, then crashed 80% when Elon Musk stopped commenting on it. Solana, SOL/USD. In 2023, Ethereum killer, euphoria and airdrops of projects like Jito triggered a rally to $120, but a 40% correction followed once social volumes dropped. How to detect dangerous FOMO. Google Trends. Check keyword searches for how to buy Bitcoin or best crypto to invest in. If there is an extreme spike, watch out for cycle peaks. Social volume on Lunar Crush. Volume of hashtag Bitcoin mentions on Reddit/Twitter going up 300% in a week equals sign of FOMO. 2. Fear and panic selling. When the market turns into a funeral. Analogy. Fear is like panic during an earthquake. People run like hell selling assets, even at fire sale prices, not realizing it's a buying opportunity. Classic FTX collapse example, 2022. BTC plummeted from $21,000 to $15,000 in 3 days. The media was busy saying crypto is dead, but behind the scenes, institutions like Fidelity and BlackRock were quietly buying below $17,000. Luna/UST crash case, 2022. Extreme fear sentiment saw Luna plunge from $80 to $0.0001. But at the same time, projects like ETH and ADA rebounded 200% in the following 6 months. How to capitalize on fear. Fear and greed index, alternative to me. Index less than 25, extreme fear time for slow accumulation. Example, index hit 8, historical low, when FTX collapsed, just before the 2023 rally. On-chain analytics, Glassnode. Check the MVRV ratio, market value to realized value. If 1, the asset is undervalued, example, BTC at $16,000 in 2022. 3. News catalysts, from regulation to technical upgrades. The crypto market moves fast not because of what is happening, but what people think will happen. Global regulation. SEC versus Binance, 2023, the FUD, fear, uncertainty, doubt, sentiment made BTC drop 10% in a day. But after the news died down, The price rebounded as the market realized Binance remains dominant. EU MiCA Regulation 2024, initial sentiment was negative, but was eventually deemed positive due to crypto legitimization. Technology. Ethereum Denkin upgrade. March 2024. Rumors of ETH gas fee reduction triggered a 60% rally before the upgrade, but prices went sideways post-release due to sell the news. Bitcoin halving. 2024. History shows prices often drop 1 to 2 months post-halving, but rise significantly 6 to 12 months after. 4. Contrarian strategy. Become the market's sole doctor. Principle. If you feel very confident, you're probably wrong. Successful example. 2022. While Bloomberg and CNBC were busy reporting the death of crypto, contrarian investors were buying BTC at $16,000 and ETH at $880. The 2023 turning point zone. 2023. While everyone is focused on BTC, contrarians are buying altcoins like INJ plus 3,000% and FED plus 1,500% that are still undervalued. Market signs of euphoria, time to sell. Crypto influencers suddenly become celebrities on mainstream TV. Meme projects without utility go up 1,000% in a week, e.g. Bonk, WIF 2024. Trading volume on Binance reaches ADH. Example, $76 billion per day in December 2023. Practical sentiment reading tools. 1. Social listening. Lunar Crush. Track social dominance and emotional sentiment, positive/negative, on Twitter/X, Reddit. Sentiment. Detect keywords like buy, sell, or scam on crypto forums. 2. Market data. CoinGlass. Look at futures open interest. If high in resistance zone, potential short squeeze. Crypto panic. Global crypto news roundup plus sentiment score. Warning. Don't fall victim to the narrative. Terra Luna Classic, LUNC, case asterisk. The LUNC Army community on Twitter continues to pump up the revival narrative, but the price remains at $0.0001, 2024. AI hype 2023 to 2024. AI crypto projects like AGX and RNDR rose 500% plus on ChatGPT hype, but many crashed 70% once sentiment died down. Anti-manipulation strategy. Cross-check the narrative. If a coin is hype because of cooperation with Google, check the company's website directly. Volume is not equal to truth. A 500% volume pump in BitGet/Bybit could be the result of wash trading. Conclusion. Buy the dip when the media is full of tears, sell the hype when the media is full of laughter. Combine sentiment with technical, support/resistance, and fundamental, team, project utility, analysis. By mastering the art of reading sentiment, you can be a frontrunner, not a victim, in the psychological drama of the crypto market. Chapter 4. Crypto Divergence. Hidden signals from RSI to open interest. How do market lie detectors expose price manipulation? Divergences in crypto are like hidden alarms that tell you price is lying. When the price is moving up/down, but the indicator or on-chain data is moving the opposite, this is the critical moment to be cautious or take action. 1. RSI divergence. Market fatigue detector. Analogy. Think of the RSI, Relative Strength Index, as the heartbeat of the market. If the price continues to fall but the RSI starts to rise, bullish divergence, it's a sign that the heart of the market is still strong. A reversal could happen. Bitcoin 2023 example. When BTC plunged to $25,000, August 2023, the RSI on the daily chart formed a higher low, bullish divergence. This is a signal that selling pressure is weakening, even though the media is still full of FUD. The result? BTC shot up 70% to $42,000 in 2 months. How to use. Use 14-period RSI on daily/weekly timeframes. Confirm with volume. Divergence plus rising volume equals strong signal. Tools. TradingView, RSI plus volume profile. CryptoQuant, RSI versus exchange flow. 2. Open interest, OI, divergence. The futures time bomb trail. What is it? Open interest is the total futures contracts that have not yet closed. If the price rises but OI falls, it means that the rise is driven by a short squeeze. Short players are forced to close positions, not organic demand. Ethereum, ETH/USD, 2024 example. ETH rose from $2,400 to $3,000 on Binance Futures, but OI fell by 15%. Apparently, this was a manipulation pump by whales on BitMEX that triggered a $200 million short liquidation. Afterward, ETH fell back to $2,600. Strategy. Check the OI on CoinGlass. If the price and OI diverge, watch out for a reversal. If OI goes up plus price goes up equals strong trend. If OI goes down plus price goes up equals danger signal. 3. CVD, Cumulative Volume Delta Order Trail Whales. What is it? CVD is the difference between buy and sell volume in the spot market. If the price rises but the CVD is negative, more sells, it means that the rise is a fake pump. Maybe the whales are distributing. Solana, SOL/USD. March 2024 example. SOL rose from $130 to $150 on Coinbase, but the CVD in that zone was negative, minus $12 million. Apparently, this was the action of market makers who pumped up the price while selling silently. The result? SOL dumped to $120 in 48 hours. How to track CVDs. Use a platform like Glassnode or Keiko. If CVD is positive in the support zone, equals genuine accumulation. 4. On-chain divergence. The whale's digital footprint on the blockchain. On-chain analytics are the spies that uncover the whale's plans before the price moves. A. Exchange net flow. Asset entry/exit. Bullish divergence. Price drops, but assets exit the exchange, whales accumulate. Example, BTC dropped to $26,000, October 2023, but 18K BTC left Binance in 3 days. 2 weeks later, BTC rose 30%. Bearish divergence. The price rises, but the asset goes to the exchange, whales are ready to sell. Example, before the Luna crash in May 2022, 5 million Luna entered the exchange in a week. B. Whale transactions, greater than $1 million. The big hand footprint. Cardano, ADA/USD, 2023 example. As ADA consolidated at 25 cents, there was an increase in whale transactions, greater than $1 million, to cold storage wallets. This signaled accumulation before the rally to 60 cents. Tracking tools. Sentiment. Monitor real-time whale activity. Into the block. Check the concentration of large address holdings. Case study. Luna crash 2022. Ignored divergences. Before Luna collapsed, there were dire divergence signals. 1. RSI bearish divergence. Luna price made a higher high at $120, April 2022, but the RSI dropped. 2. On-chain disaster. UST supply on exchanges rose 200%, from 500 million to 1.5 billion, in 3 days. Whale wallets, greater than $1 million, sold $400 million worth of Luna before the crash. 3. Open interest manipulation. The Y of Luna futures on FTX rose 300% as the price started to fall, a sign of a short attack. Lesson. The combination of technical plus on-chain divergence is a red light that should not be ignored. Mandatory tools for divergence detection. 1. CoinGlass. Track OI futures plus real-time liquidations across all exchanges. 2. Glassnode. On-chain divergence alarm. Exchange flow, whale activity. 3. TradingView. Custom script for RSI/MACD divergence. Important warning. Divergence is not an instant signal. Wait for confirmation, e.g. closing candle above/below key level. Don't rely on one indicator. Combine RSI divergence plus volume plus CVD. False signal and low liquidity. Small altcoin pairs, e.g. memecoins, often manipulate divergences. Conclusion. Divergence is the secret language that the market uses to divulge hidden plans. By combining technical, on-chain, and sentiment analysis, you can be like a detective who uncovers the whale's schemes before the market reacts. Remember, in crypto, data never lies. It's the narrative that lies. Chapter 5. Global Conclusions and Strategies. The art of reading the market's mind before a reversal happens. How to be smart money in the crypto market chaos. In the crypto world, price reversals are not miracles. They are the result of preparation, data, and psychology. While retail traders are busy reacting to yesterday's news, the smart money is already 3 steps ahead. Here's how you can join them. 1. Deadly combination. Technical plus on-chain equals secret weapon. Analogy. Technical analysis is the GPS that shows the path, while on-chain data is the satellite that monitors the movements of the enemy whales. Application example. Bitcoin at $60,000, May 2024. Technical, supports $60,000, former 2021 resistance, plus oversold weekly RSI, 30. On-chain, negative exchange net flow, minus 12K BTC/week, plus grayscale outflow slowing down. Result, BTC rebounded to $67,000 in 10 days. Solana at $80, January 2024. Technical, double bottom on weekly chart. On-chain, 500K SOL exited Binance to institutional wallets. Result, SOL rallied 300% to $200. Required tools. TradingView, technical patterns plus volume. Glassnode, exchange net flow plus whale activity. Arkham Intelligence, track institutional wallet movements. 2. Blood in the Streets strategy, by when the market cries. This Warren Buffett principle is a contrarian's primary weapon. Fear and greed index in extreme zone. Less than 20, fear, when the media is buzzing about Bitcoin is dead, e.g. December 2022, buy quietly. Greater than 80, greed. When a meme coin without utility rises 1,000%, it's time to take profit. Real example. FTX collapse, 2022. Fear and greed index hits 6, historical low, BTC at $16,000. Those who buy here can profit 200% plus in 2023. LUNC Mania 2023. The greed index hits 85 as the LUNC army community pumps up the price, even though the project is dead. The result? A 95% drop. How to execute. Allocate 5 to 10% of the portfolio to buy extreme fear in blue-chip assets, BTC, ETH. Use DCA, dollar cost averaging, if the price continues to fall. 3. Detect manipulation. Don't fuel the pump/dump. Whales like to play on retail emotions with tactics. Pump futures. Pump prices on Binance/Bybit futures with thin volume. Provoke FOMO, then sell in the spot market. False breakdown. Drop the price below psychological support, e.g. BTC $60,000, to lure long liquidation, then buy cheap. Anti-manipulation weapon. CVD, cumulative volume delta. If price rises but CVD is negative equals whales are selling. Example, SHIB rose 50% on KuCoin, but CVD minus $5 million trap. Open interest OI. If futures OI goes down when price goes up equals the increase is not sustainable. Example, XRP rises 15%, but OI on BitMEX falls 20%, incoming reversal. 4. Action example, sniper entry strategy in critical zones. Scenario, Bitcoin is approaching $60,000 post-April 2024 halving. Step 1, technical confirmation. Support $60,000, resistance turns support. Weekly RSI less than 40, oversold. Hammer/bullish engulfing pattern on daily chart. Step 2, on-chain check. Net flow exchange, minus 8K BTC, accumulation. Whale transactions, greater than $10 million, are increasing on the chain. Step 3, sentiment analysis. Fear and greed index, 28, fear. Media, will Bitcoin fall to $50,000? Execution. Entry, $60,500 with stop loss at $58,900, 2% risk. Target, $72,000, former resistance. 5. Life-death notes. Don't ignore this. 1 to 2% risk per trade. If the portfolio is $10,000, the maximum loss per trade is $100 to $200. This limits losses when signals are wrong. Follow the whales, not the influencers. Grayscale/BlackRock wallet buy could be an accumulation signal. Influencer promoting 1000x token, 99% scam. Crypto isn't rational, but data doesn't lie. Example, when everyone was FOMO to bonk, sentiment data showed 40% of transactions were wash trades. Must-have final tools. 1. Arkham Intelligence. Track the movements of institutions like MicroStrategy or Bitcoin ETFs. 2. CoinGlass. Real-time liquidation alarm plus OI futures. 3. TradingView plus Glassnode combo. Combine technical patterns with on-chain data. Afterward, in crypto, you don't need to be faster than the market, just more disciplined and smarter than the crowd. With the above strategies, you are no longer the small fish that the whales prey on, but the cleaner shark that eats the remnants of their panic. Remember, every big reversal starts with distrust. The funds that survive are the ones that master the data. Now, it's time to act. Be the first to know and the first to profit. Okay, before we end, don't forget our golden rules. 5 important rules of Mr. Suw Crypto. First, don't use hot money. Use extra or idle money. Do not use money for daily needs or money that will be used in the near future. Second, don't over-leverage. Risk what you can afford to lose if you trade derivatives, futures. Always use a stop loss because the crypto market is very volatile. Third, 70 Bitcoin 30 altcoin. Always allocate more in Bitcoin because Bitcoin is the parent of crypto. By allocating more in Bitcoin, your portfolio will be safer when the market does not meet expectations. Fourth, always stay cash. Always stay in cash 10 to 20 to buy when the market discounts or drops significantly. Then you can sell when the price has risen so that you still have cash for the next discount. Fifth, think long-term. Investing is not about 1 or 2 days to get rich. So think long-term and minimize the risks that might make your money disappear. Everything takes time. Remember, Warren Buffett didn't build his fortune overnight. If you find this video useful, help us to continue to make videos like this by clicking subscribe and share with your family and friends. Don't forget to let us know in the comments column if there is anything you have questions about, because your comments mean a lot to build this channel. See you soon, and don't forget, HODL knowledge and mindset first, then HODL assets.